What's up, YouTube? It's Marty V, and I'm back with some more shit. And today I'm gonna show you guys that don't know. Most of the experienced traders do know, but for you new beginner traders that trade indices, I'm gonna show you guys how to use them in confluence with one another. So let's go to the charts. Okay, first things first. Those of us that like to trade indices, a lot of us have a preference. Like when it comes to USD pairs, the indices such as NAS100, US30, and SPX 500. So, some of you might like NAS, like myself. Some of you like, that demon US30. And some of you like SPX, which SPX, is very resourceful. But the main thing is, if you don't notice, all three of these pairs correlate. They all move the same. The only time they don't really move necessarily the same is if, depending on the reaction to news or high impact news or NFP, CPI, and things of that nature, it might drive one of them off in a completely opposite direction. And for one, I refer to them like as triplets, like three sisters, because with triplets, not all of them are identical, but they look the same. You know what I mean? So what I mean by that is, if you just like pull up your charts and look at I'm on NAS right now. But if you look at US30, I'm at the same time, and SPX, they look damn near identical. And I say that of the three, they move, close to the same out of the three. And I feel like NAS is like the tall triplet of the bunch. Move the same, but it's just a little bit more lanky with it. And on any given day, depending on which pair you're trading, out of those three, one may move faster than the other, depending on news or whatever's pushing the market at that time. So there'll be some days where US30, may be moving faster than SPX and NAS. It may be the fastest one in first place. So what that tells me, as long as it's not going in a different direction, it lets me know, like, all right, that's my confluence right there if I'm trading SPX or NAS. Because wherever US30 is headed first, eventually NAS and SPX is going to get there. So it gives you a leeway, it's like you're scouting ahead, for what's going to happen, pips and zones, before you even get there. So right now I got this all played back to Thursday at 10 a.m. So, we're just treating this like if this was back testing of sorts. So just gonna let SPX run a little bit. Okay, let's just say if this was a supply. I don't know. I didn't look ahead of time, prepare for it. I'm just winging this shit. So let's just say if this is supply. So let's see if it's respected. That would have been an aggressive move if you'd have went down on it, depending on what's to the left too. If you want a break of structure, let's just say you got in aggressive just because of that pullback, that wick. So almost gave you a 1-to-1, but it was pulling down, wick back up, got stopped out, right? All right, let's go to US30. Same situation. So if I was to boom, that's the thing about it too. You may be zones that play out on one of the other two pairs that don't play out on, let's say US30 for instance. Or there's times where both pairs are flowing in one direction and they'll start stalling because one of them is, let's say if SPX and US30 are dropping in a downtrend, and NAS might be, in a jam based on whatever, price reaction it gave to, a certain specific news event. These two pairs may be stalling and giving NAS time to catch up. It's weird, it's weird. Like I said, I don't know if I told y'all this before. Tell y'all some of y'all this. I approach this shit like a video game, not like a broker or a day trader. It's just me in general. Well, look, you got stopped out right there. So let's just say if SPX was moving faster than a bunch and you happen to just mark up a supply on that SPX, you got stopped out. You can go over to US30, and if you were trading US30, that lets you know, all right, this is going to be an invalid zone. So I need to look for a better, opportunity. Same thing if we go to NAS, and NAS looks a little, like I said, this is the tall one of the triplets. It looks a little rough, but let's just say if we were just drawing zones, and this is around the same time, keep that in mind. So look, all those wicks, but it shot up. Price was on, but it gave me a supply. So let's look at that breaker structure. Let's see what happens here. All right, now it's an aggressive move to the downside. Let's just say you got in aggressive, or you may have wanted to. That'd be me. I'd be trying to take out this wick right here. I'm just drawn to that with my tape profit targets, but let's just see what's gonna happen. Boom. All right, so look, this was all the same setup. They were all moving the same. I landed that aggressive supply off of this, for a 1-to-1 off of NAS, with this as confluence. US30, it wicked up, which it probably would play out. This is a C just in case. Nope, it didn't. It broke through. This is invalid. Same thing with SPX. Same thing. But you get what I'm saying, guys? It's like, let's just say, it may give you, like, you may go other way. Let's just say if NAS was the fastest and you landed a supply on that NAS, but so if you're trading SPX or US30, you're waiting for the same opportunity, and instead you get stopped out. It's like a double-edged sword in a sense. So like I said, guys, this is a simple little video. I use this all the time. I learned this from bouncing back and forth when I was like trying to figure out when I started trading indices, which indice would suit me better. At the time it was SPX because I had a small ass account, and I was grinding. Like I was at one point with Hanko trade, I was trading a 0.01 lot with like 90 cents in there, and could take that bitch to $100. So I was in there grinding and experimenting. So I know indices very well, and US30, don't even bother with that unless you got a lot of money in your account. How to trade indices, because US30 will fuck you up, in a matter of no time. This is like the top of the food chain, I feel, as far as what you trade in the Forex market. But anyway, like I said, there's times like recently where, depending on the news, NAS might be going up and US30 and SPX may be going down. But let's say if it was a big ass move, like this downtrend, for instance, if you just caught this when it broke out right here, and you just caught it, minus the pullback, that's a lot of pips. But let's say SPX was moving the fastest and it made this move first. Well, if you're over here US30 at the time, that lets you know, all right, the confluence is the same. We're starting to making lower highs, so you're starting to head to the downside. So if you entered, off a correct entry, you can just ride that shit down to where SPX settled at. Didn't making any sense to you guys. Same thing with NAS. It was up here. Like I said, it don't look exactly the same. It's depends. Each day is different, but eventually they all three fall in sync. So despite that pullback, that wouldn't be a wise trade to take, but it just gives you an idea. Like on my videos about price rebalancing, let me see if I can just scroll and find price movement right here. You know, this was a breaker, but before that, you know, like eventually price got up. You know, it's high at this point, so eventually it got to make its way back to the downside, right? So I'm using this as the marker where I would scalp it once it broke down to when it goes back to the downside. I'll be scalping it with minimum risk, you know. And at this point, usually I get in like when it breaks a certain low, and if it gives me a correct supply entry, right? So let's just see, for example, if it touches this mark. I don't even remember. It's a while now. It's not touching that mark. Well, fuck it. Let's go. Get on the gas. So it didn't. All right. Let me find another example. What's that move? I mean, this kind of right here. If you rewind it. Let's see. So for example, price got high. It dropped, filled that gap, and it shot back up. All right, it still needs to rebalance. Let's look at the distance between the 200 EMA and price. So let's just say you caught it like a liquidity grab. So if you got in, because you know in a sense it's an M formation, even though it's a counter trend move. And this was the target. Or if you just target it to the trend, the 200 EMA. Boom. So overall it played out. It hit right where I originally had this marked up, right? So this move played out. So let's say if NAS100, usually NAS100 is the fastest, you know, it switches places with US30, you know, throughout the week. But okay, what time this move was? Usually, yeah, 8:30. That was news. So let me go back. What day was that? May the 10th. Okay, it's right around this time, right? Okay, this is US30. It's the same situation. The trend is not as definitive, but you know, when you stretch the candles out, you can see. Now it looks like NAS, right? You know, so let's just say you got in right here, you know, a liquidity grab. Boom. And this was your TP target, right? Right where this would trigger, this gap would be filled and it would trigger a demand, right? At this point. So let's just see if US30 plays out just like NAS. Boom. See what I'm talking about? So if NAS was moving faster and it made that move, it rebalanced price, right? That lets you know if US30 is still back here, you know, and NAS already made that move, that lets you know, I can get in here, just balls to the wall and jump in off a liquidity grab because you know price is going to drop most of the time. So if you just jumped in, it's fucking free money, you know? Boom. It's like that. Let's see what SPX look like. It's May the 10th, 8:30. Look. Y'all seeing what I'm seeing now? It's the same shit. You know? Getting in off a liquidity grab. Boom. If I want to ride price here to where this demand could be triggered, Boom, boom, boom. Yeah, it pulled back, you know. Then it made a new supply entry. Probably on another time frame. Boom. You know, see what I'm talking about? Especially with these rebalances setups. This is why I started using rebalancing so much, because of toggling back and forth, looking at US30 and NAS and SPX, you know, and just seeing who was in first and who was in second and third, and if who was in first had a good ass setup with a big, you know, risk reward, you know, more than likely the second two are gonna play out the same way. You just wait for your entry, or like if it's a liquidity grab, bam, you know, use all three of them to help yourself, you know, depending on what's your favorite pair. And for most is SPX, I mean not SPX, but it's NAS and US30, you know, because you know you get a lot of money off them motherfuckers, even though they hurt too when they go against you. But you know, SPX is great for people that are trading small accounts and just slowly building it up. You know, it's a great pair to use. It's just not as damaging as US30. You know, US30 will bless your ass and then cut your fucking head off right after it bless your ass. So even though, I mean, props to y'all that trade US30. I get in there and mess around with it a little bit, but then once that bitch start burning my hands, I'm out of here. But anyway, along with, you know, indices, confluences, what I started using was, you know, everybody's big on EU and the DXY, EU and the DXY, the dollar's up and down, you know, and based on that, man, fuck all that. You know, I'm trying to get something out of both ends, meaning that I found a pair that moves the same, you know, with that concept of EU and the DXY, such as NAS100 and USDJPY. And because of it, I ended up, you know, found out that they were not confluence, but they're inversed with one another, just like the EU and the DXY. So nobody really trades the DXY that I know of or anything like that, but you can trade US, you know, USD JPY. Hell yeah. So there's times like, let's see, this was what, 8:30. Let's go to UJ. May the 11th. Where you at? Where you see? Well, it's right in front of me. Shit. What I'm talking about. This is the same fucking setup. It's just inverted, you know. And just like price, you know, it had to rebalance. Not by much, but you know, it was bearish, and then it pushed back up to fill these gaps. But you see what I'm saying? Let me start. Where was I? 9:55. So let's get a better picture. So that's 9:55 with NAS100. This is 9:55 with UJ. And why I like it is they use these two together, because if I'm in a UJ trade, and people in the Discord hit me every morning, I'm in a UJ trade, you know, and I'm in a buy, and you know, I'm constantly looking at NAS to make sure that bitch is, you know, selling. Because the minute it starts pushing up, next thing you know is UJ is pushing down, which is away from my buy. Then I'm in drawdown, or I'm stopped out unless I cut the loss. So the only time you'll see them go in the same direction is, like I said, depending on news from, you know, which pair, or you know, high impact. Is how they react to it, you know. So with NAS like this was a better selling opportunity than UJ was a buying opportunity. I mean, yeah, you had a damn near a demand right here with the gap right there. I mean, if you really want to risk it, but you had a demand right here. So, I mean, so I stand correct. This was a good buying opportunity right here if you took a demand, despite this liquidity sitting underneath. But point is, sometimes as you're using them in confluence, you'll be like, your main priority is NAS100, and you'll be like, oh shit, look at UJ. You know, she looking fine as hell today. Get on here. You know, look. You know, I'm on a quick little buy. You know, you just forget about NAS after a while. You know what I mean? So that's my point with using UJ and NAS100 and confluence with one another. You know, practice it. You can do the same thing. Like I like to use USD in confluence with US30 because they move pretty much the same, damn near. Let me pull up USD. Okay, this is USD. Boom. Well, that got disrespected. USD. We're just taking a look to the same exact day. So it's US30, USD CAD, it's bullish. Give good demand right there. Demands. I need to start messing with that pair more. US30 was bearish, then it went bullish. You know, because they're chasing, you know, old swing highs from yesteryear up there. Fuck my NAS shit all up. But anyway, you know, US30 was inverted. You know, it was bearish, mainly right here, while USD CAD was bullish. Then you see what the USD CAD starts to push down, and US30 went bullish. You know, just like the EU and DXY. So yeah, this is one I just want to get on here and ramble about. You can use the USD indice pairs, the triplets as I call them, NAS, US30, and SPX, and confluence with one another, just depending on which one's moving faster. And of all those three, you'll find cleaner setups on a different pair than you would on the other two. And it opens up your arsenal, you know, it gives you more opportunities, and you're in sync with watching what all three of them are doing, you know, with time and patience. So that's all I got to say, guys. Hope this helps people out there that didn't know of this. So till next video, Marty V out.